I want to first speak to our two demographic groups here. I'll divide them up into anxious investors and our students. And to the anxious investor, you need to hear it again, right? Housing prices are down. The stock market is down. And this is the one that really hurts. Municipal bond prices are down too. Now, how do I know that? I feel your pain. If I get myself in the head of a college student, let's see. You're looking at a world where the price of oil has tripled. The stock market has collapsed. The economy is in deep recession. And looking out a year to graduation, you have no clue as to whether anyone's going to get a job, let alone yourself. I'm not talking about you. I'm talking about me in 1975. Price of oil had tripled, $4 to $12. The economy through 1974 was in a terrible recession. I think it was 8% unemployment rate. And there was in total angst about whether our model made any sense whatsoever. We came out of that. It was a hard adjustment on the real side of the economy. We had to learn how to use less oil, and we had about 5 minutes to do it. And you will notice that we learned that lesson. As much as everyone says energy is our biggest problem, guess what? We kind of shrugged off the $150 barrel of oil because we took the steps to insulate our economy to a large degree from those oil prices. That's not what hit us. What's interesting about events like this is you always are prepared to fight the last war, but you're not prepared to this one. And if I had this is not an analogy that really works, but I'll try it anyway. We were overexposed to low energy costs back in the mid-70s, and here we're overexposed to leverage. And what we have to do going forward to fix this is to learn how to live with less leverage. And that's a major transformation. Everybody's going to get hurt by this. We will get through it. It's just learning how to restructure the economy in a new particular way. I'm going to talk just a little bit about one of the programs that's being put in place as part of the solution here, and that's the Troubled Asset Relief Project, TARP. If those words don't hit you, how about the $700 billion, right? You got that one, right? So the $700 billion. The $700 billion project is morphing in front of us right now. As it was initially all right, let's say as the legislation was passed, given all the changes and compromises in it, it was still aimed at the first, at Paulson's first goal, which I think is really sort of a free market cleanup. If you think about what's going on, you have troubled assets, lots of losses being taken by the banks on a scale of credit products. And the idea was to go in, buy them, so create a fund by borrowing, the government making, the taxpayer borrowing through the government, take those assets off the books, give the institutions money instead. The U.S. government or the taxpayer would be the investor holding these troubled assets. The banks would be cleaned up, and we'd move on. That was the plan. That's the vision. Now, it's changed. And the change is, about the first third of that is now going to be direct equity investments in the banks. So as you saw, there was a group of 9 that took the first monies, and the government invested in a sort of equity security that paid a dividend and also has some warrants in case the stock of these companies go up. I think that's a really good move because it's addressing the dirty secret. And the dirty secret is banks are still sitting on losses that they have not recognized. And the sort of the asset exchange, taking the assets, the troubled assets off the bank books, the vision behind that is if you clean them up, they will be able to go out and raise new capital because they'll be transparent, they'll and they'll be able to be evaluated as ongoing businesses and not weighed down from the story. And if you want some evidence that that can work, just think of the Merrill Lynch transaction. Merrill Lynch dumped 20-some billion of their troubled assets at fire sale prices. People are calling this fire. They dumped them at the market price. There's no bid. You want to get rid of them, you pay the market. You get paid the market price, and you move on. And that was a very good strategy because you saw over the weekend in which Bank of America had a choice of buying Lehman or buying Merrill Lynch. They trusted the numbers at Merrill Lynch because they had seen the cleanup activity happen in the prior weeks. It was just an easier sell. So the idea, if you clean something up, mark the books correctly, that you'll be able to raise capital, I think you should nod your head and say, yeah, I've seen something like that. That's the good part. The bad part is I don't think the financial institutions have marked all of their bad assets down to the price that is out there for them. And so capital that's out there is probably not really there. And where this $750 billion should be going is to fill those holes. Don't give it away for free. Take equity that you get back. So we're filling the holes. We're being the capital provider of last resort. That process, I could envision all $750 billion going in that direction. And to me, that's a better program. I think we have the UK to thank for that. They went in that direction, and I think we got pulled along, and I think that is the right direction. So if I were going to do anything here, I would send the Truth Squad out. Get to all these institutions, make them mark the assets at one common set of prices, and let the Fed and the Treasury help decide what the fair market values are, or not, I'm sorry, where the market is. Where the market is. I think that one problem with the Fed's first testimony on this, Bernanke's testimony, is he said, well, we're going to pay a price that is fair. And it was double what the market would pay at the time. And that was just a free capital giveaway. I think if we go ahead and provide the funds but get equity, we're going to be much better off. The market's going to have a cleaner look at where the system is. And once you deal with the truth, you're better off in devising the private sector is better off with devising the right decisions to go forward.